where the
He tried his best, but it always ended up poorly for him.
He's a good boy.
So
he was like that bad kid with a good heart that all the movies are made about.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
It's another fine episode of the Money Path Podcasts with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On today's What and the Why, it's sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with the casual conversation of news and the markets.
No. Well, you won't hear any snoring in the background for this show because Walter's not here, so no snoring.
Super sad.
Yeah, super sad.
Super special boy. You forget how much like that snoring, you love that snoring, even though it's like an annoying noise in the background. It's not annoying at all.
Well, you know what? I realize even though I have 2 dogs left, it's completely quiet here. Like, he made all the noise. Between his snoring, between his grunting, between his grumbling, between his... he made all the noise.
He's a super good boy.
Oh, I wouldn't call him that.
He was terrible, which is one of the things you loved about him.
Yeah, he was one of a kind. So what? Before we get into it, it's Payroll Friday. Well, that is getting into it, so we should kick off real quick with the payroll numbers.
This was a ridiculously good payroll report for stocks and the U.S. and the general climate. 313,000 on the headline number, way higher than estimates. Estimates were in the 200,000 range. An addition of over 50,000 jobs to the last 2 months, revisions. Unemployment rate stayed at 4.1, but for the best possible reason. The labor force participation rate, which has been stuck at 62.7 for the last 5 months, jumped to 63. That's an addition of 806,000 people into the workforce, which normally would have pushed the unemployment rate from 4.1 to 4.2 or 3. So what that means, people, is the rate you see, that 4% rate, is basically the number of people looking for a job that can't find one. There's this huge block of people that have either gotten discouraged, they've retired, they've won the lottery. They're somehow not counted as people who actually want work. So 806,000 people went back into the pool that is counted as people who want work. That normally raises the unemployment rate. The unemployment rate stayed the same. That's the highest number of workers to join the labor force since 1983. Now, that is generally a sign of optimism, consumer and worker optimism, which we have seen in consumer confidence numbers over the last couple of weeks. So that's a massive, massive positive that it went up that much and the unemployment rate didn't move. No change in the U6. That's a measure of underemployed. Because it's been in the news, we don't normally look at this from a financial perspective. But black unemployment dropped 7 basis points to 6.9%. That's a new recent low. And then lastly, most importantly, wages didn't move. So we got all this job growth without inflation pressures. There's been a couple of fringe analysts and shops out there that have said they're expecting 5 rate hikes from the Fed this year, as opposed to the expected 3. And what the Fed has said is 3 rate hikes. Those people can shut the F up now, because this 5 is not happening if the numbers remain sort of along this path. So this is a massively positive, great jobs number. And in the theme of, we at the Money Path Podcast don't believe that the president should get credit or blame necessarily for the unemployment numbers and the rate and the non-farm payroll additions. However, Keep in mind that this is all prior to the tax cuts actually working, to any fiscal stimulus going into place, because this is only the first month of the tax cuts. They were passed in the middle of the month, registered. So there's no fiscal stimulus in these numbers. That tells me that we're about to embark on a path that we haven't seen in quite a while, because for the first time in, let's say, 10 years, half of Bush and 2 Obamas, there's actually fiscal stimulus coming into the market, not just monetary stimulus. So really, really good numbers. Really good numbers.
In the follow-up segment, or worst IPO ever, Blue Apron hit a new low of $2 this week.
I had an interesting millennial conversation over the weekend. I was talking to my brother, who owns like an Italian deli, and he was telling me about problems with his sales because they've never had a millennial come into their store. So he does things like chicken parmesan and lunch meats, and he has an espresso bar and, bakery pizzas and things like that. And he said his clientele is essentially dying, moving to warmer climates, or getting recommendations from their physician that they shouldn't eat this stuff anymore. And he's never really seen a true millennial come into his restaurant. And it was funny. So I was then talking to my niece's fiance, who's obviously a millennial, and I asked him a question about, does he search Walmart for things that are cheaper on Amazon? Because he was just bragging about how great Amazon is. He gets a box delivered every day to every other day. Like, if he doesn't see an Amazon box at his front door, he thinks something is wrong. And I said, did you know that oftentimes Walmart online, with the same or similar shipping options, free, overnight, things like that, sometimes same day, if you live within a store vicinity, that they're often cheap enough to even absorb shipping when there is shipping? And he goes, no, really? Now I'm going to look. I go, are you? He goes, no, I'm just going to use Amazon. There's a cool factor to Amazon that Walmart doesn't have. Now, having said that, most people in the U.S., somewhere above 90%, live within 5 miles of a Walmart superstore, Walmart grocery store, or Walmart already designated distribution center. Only about 35% live within 5 miles of an Amazon distribution center. So Walmart has to do something. If they really are going to go against Amazon, which I think they are, they need to do something to kick their sort of uncool that they've got attached to them.
Well, did you see Blue Apron? One of the reasons people said they got sold off. Although, see, I just looked at the chart and they went back into the rotation zone on the weekly a couple weeks ago. Then they've sold off again. So nice rotation zone set up for going lower. But Walmart on Monday revealed it's launching its own line of meal kits that will be sold in stores through its online grocery delivery service. The kits will soon be made available in as many as 2,000 Walmart stores by the end of 2018. That they're going into the meal kit business. Each kit will serve 2 people and range in price from $8 to $15. Options so far will include steak Dijon and pork Florentine. The meal kits will come in 3 varieties divided up by prep time, which is interesting. 1 kit will be ready-made and only need to be heated. Another will require slightly more preparation and can be paired with Walmart's rotisserie chicken. A third version will feature pre-chopped and pre-measured ingredients, just like Blue Apron. So,
wow, that's interesting. Are they the ones offering the millennial friendly, or is that It says
what's millennial friendly?
Well, I don't know. It says it is also I'm sorry. It is also seen as a millennial friendly offering. Okay, I read that wrong. I thought they had a special millennial friendly section.
Well, as there's things like that aren't millennial friendly circulating around, it's like but
anything that tastes good.
So Blue Apron, had a high of 11 from its IPO, opened at 10, and now down. It was $2 this week. That hurts. Oh boy. So
that is just an ugly chart.
Yeah, that's not something you want to try to bottom pick. Not something you want to bottom pick at all. I sent you that. What was your take on? We'll get to some crypto stuff now, but what's your take on that SEC platforms, the SEC Division of Enforcement Trade in the Markets, talking about none of these platforms, none of these quote exchanges in the U.S. to trade are licensed exchanges technically.
That seemed like a CYA press release, like a cover your ass press release, because what I garnered from it was not that these platforms are illegal or they need to cease operating. It was just that, look, if you guys want the SEC's help if stuff breaks bad, you better be dealing on an exchange that is registered with the SEC, of which there's not many, because only then and only then will the SEC get involved, and they won't be preventative. This is what I took from that. They won't be preventative. They will be there as a remedy, in which case I think we are starting to get good experience, not us personally, but in general, good experience as to how effective those remedies are going to be. But I think the SEC was basically going, don't come crying to us if you're not trading or buying ICOs or buying and hodling altcoins on exchanges that are not registered with the SEC. Don't call us if something goes wrong. That's the way I read that.
Okay. Do you think that they'll, is this just like an opening warning that at some point we might consider making, the only way you'll be able to trade cryptos in the U.S. is if some of these exchanges go through, or some of these current crypto exchanges start possibly going through more formal requirements?
I don't know that I would take it that way, honestly, because, again, the way it read was it was a warning to people to not play around in this area. I mean, if I wanted to, Bank of Bob, I can give my friend $50,000 to hold because I don't want to go to a bank, but then don't go to the FDIC and go, hey, I gave my friend $50,000. Well, he left with it. You know what I mean? So I think that's what the SEC was saying. I think they were saying people are transacting on these digital assets on places that are out of our jurisdiction. Buyer beware. So I don't know that it was necessarily a shot across the bow that, hey, we're looking to start making the other ones illegal. I think there would have to be a much larger folder of complaints that right now I think the SEC has enough complaints where they could go, look, that's not us. I don't know what you want me to do with it. I think that's what they're saying. And in order to kind of curb those, they're starting to say, okay, look, don't come to us if you choose to do this. I mean, I can't call the SEC if I go to a restaurant and they serve me bad fish. It's not in their jurisdiction. So they'll be like, what are you coming to me for? But if they all of a sudden, and I still don't believe cryptocurrencies are mainstream. I don't know if you guys do. If they all of a sudden, and especially with the much lower volumes we've seen since the fall from 20,000 in Bitcoin, if all of a sudden they start getting just a plethora of people, they're going to have to do it. I don't think they have that kind of volume yet.
Or if we have one of the major exchanges in this country go down or get something that could be fraudulent, I think that
there has to be a large number of people complaining about losses, or important people complaining about large losses. One of those two. Believe me, if Lloyd Blankfein lost $10 billion in it, that's chairman of Goldman Sachs. If Lloyd Blankfein lost $10 million in it, all of a sudden the SEC would be happy to get involved.
I don't see Lloyd trading on exchanges.
I don't either. But look, the tight suits at the SEC who see altcoins as the sort of domain of guys who need a shave and a haircut and probably need to take that wool skull cap off their head for 5 minutes. They don't care about those people right now. They should, but they don't.
I mean, apart from Coinbase and Robinhood, the barrier to entry to be a creator in cryptos is so technically advanced that you know what you're getting into because it's so sophisticated. Just do it.
And that, by the way, is the niche that's going to be filled very soon. The difficulty of trading those. There'll be more to come on this show about our involvement with something like that, but that's a niche that's going to be filled soon. So once it becomes easier and the trading volume goes up due to that, that's when I think people will get involved. And
there you heard it straight from Mr. Iacchino.
That's Mr. Iacchino to you.
I said Mr. Iacchino.
Oh, sorry.
Speaking of Coinbase.
Oh, yes. Speaking of Coinbase, here we go. Coinbase announced the index fund this week. The Coinbase Index Fund will give investors exposures to all digital assets listed on Coinbase's exchange, GDAX, weighted by market capitalization. So if it's a crypto listed on Coinbase, it's going to be in their index fund, and you could just trade the index fund, sort of like the SPY or something else, and they do take a management fee out for it, just so people are aware, or some fee. I don't remember if it's a management. There's some fees associated with that.
There's fees. Yep.
2%. It was interesting. They didn't give a date for a product launch. The fund will only be available to accredited investors based in the U.S. That's interesting also, because the bar to be an accredited investor, a lot of people trading the cryptos can't hit.
Right.
I mean, what is the bar? I mean, you have to have like $1 million in assets or.
So the bar, the last I remembered, it may have changed. You have to have earned $250,000 in the immediate prior year, and you have to have a reasonable expectation of earning that again. And the way they check that is they'll check your current earnings. So if you make $50,000 in the first 11 months and you get a $200,000 bonus, you won't qualify unless you apply in that month that you got the $200,000 bonus. The other way, so you have to hit that threshold, or you have to have $5 million in net worth.
Yeah, a lot of people who are currently trading the cryptos do not qualify as an accredited investor, so they won't have access to this fund.
Also, this is not a pure fund, because, it's going to be market. It's not like the S&P 500, because it's going to be market weighted. Okay, fine, by market capitalization. However, Coinbase decides what's in there. They say that it's a completely passive investment, blah blah blah. But if they add a new coin, it goes into your index fund.
Yes.
So what if you hate? They decide which coins go in their index by putting them on the Coinbase platform. So they're managing this. They're choosing the winning coins down the road that come out.
Yeah, everybody before this announcement thought they were going to finally announce that they were putting Ripple on Coinbase, and then everybody, you should have seen the stuff. What? That was the announcement? Really? Like, come on, people, get the cryptos, some of the other cryptos we want to trade on here.
The announcement was basically they're going to do what you can do alone and charge you 2% for it. That's the announcement. Yep. You could do exactly what Coinbase is doing on your own.
Does the fund have Doge? Because I'm only interested in Doge.
I don't know. I don't know if Coinbase. I don't know
sarcasm.
If they have. What was that one? Check coin or date coin?
No, it does not have date coin.
No,
see, the only things. All right. Yes, but all right. See, GDAX, they trade Bitcoin Cash, Ethereum, and Litecoin. That's it right now. That's also your fund. You have exposure to Bitcoin Cash, Ethereum, and Litecoin.
That's it.
That's it. So it's not like they're one of the exchanges that you could pretty much trade everything on, like Bittrex or Bitfinex or which I mean Bittrex.
Bitstamp.
A lot of them. Yeah. So.
And you can't put this in a hardware wallet, right? They're keeping the keys.
Well, you're trading a fund, yeah. You're trading a derivative of, so it's not that you're keeping the coins anywhere. You're just trading the derivative. So
interesting.
You will have to see how it all shakes out. I mean, they just made the announcement. They don't even have a launch date yet, but it is interesting that that's what they did announce. I thought we should put it out there. Oh, and by the way, the first U.S. real estate transaction in blockchain was completed this week. In what state?
It just was a recording function, right?
Yes.
Okay. So it's not like something big was bought with Bitcoin.
No, there's using blockchain to record the real estate deeds and their the thought is that a lot of these states are eventually going to go to something like this, and which would eliminate title searches and all the deed insurance and everything, because in the future all the transactions will be stored non-centrally in sort of the blockchain, so you'll know it'll all be traceable. So that's what the thing is. But I thought that was interesting. I think that was in Vermont that did it first. But blockchain's getting into more and more states. Oh, here's interesting. Tutellus drops Ethereum in favor of NEM's blockchain.
Wow.
So, and they said because Tutellus is switching over from Ethereum's blockchain to NEM's change. It's a remarkable decision, although it remains to be seen if this creates precedent for other companies. Why did they do this? Their decision to migrate from Ethereum blockchains to NEM is quite intriguing for many reasons. While the team acknowledges Ethereum is a very powerful blockchain ecosystem, they are also concerned about the expense associated with it. More specifically, the transaction fees are an area of concern right now, especially for projects needing to run many events per user per unit of time. There's also some concern about centralization aspect of any project building on top of Ethereum in its current state, which is something that needs to be addressed as well. And they weren't happy with the way Ethereum's blockchain performs as of right now. Their blog post called the ecosystem downright slow. Wow. And so NEM is a lot faster. NEM seems NEM upcoming Catapult upgrade will push this number to 4,000 transactions per second under perfect conditions.
Wow.
Now, keep in mind, it's nowhere near the amount of transactions per second Visa or MasterCard does, but I mean, I thought that was pretty interesting just reading about it, going, okay, this is somebody to jump off Ethereum to NEM.
You think that's something where maybe like new ICOs that were planning on using Ethereum is this enough of a piece of news to actually have those people kind of look at it?
Well, yeah, people might say, are we missing something? Or it might prompt Ethereum to make some modifications. Yeah. So we'll just have to see how it plays out. I just thought it was very interesting because that's the first major one to jump from Ethereum to NEM. And surprising enough, we don't have any Amazon crypto news, but in other Amazon banking news, Amazon to offer branded checking accounts.
I wonder what good that is.
I don't know, but they're trying to go after, I think this is going after millennials who don't currently have bank accounts.
It's interesting because Amazon does seem to be getting involved in things that they disrupted in the first place. Right? Like their Amazon bookstores and things that are opening, and their grocery chains are now checking accounts.
Yep. Yeah. So this product would appeal to younger customers and those without bank accounts. Wow. The initiative wouldn't involve Amazon becoming a bank. People say, well, we'll see about that. But
regulators will have something to say about that.
Yeah. But really, I mean, I think it sort of ties in with what you were saying earlier, with the Amazon box showing up every day. Yeah. Well, just deposit your money or a portion of, maybe you get direct deposit from your work check. You say, I want 20% going to Amazon every week, and it's just available funds for me because I order stuff all the time for Amazon, so I don't have to worry about, doing a bank transfer or doing it on credit card. It just goes to Amazon and it's in my wallet, my Amazon wallet, my Amazon checking account.
And you could totally see Amazon making a coin off of that down the road, saying that, look, if you use the Amazon checking account to pay someone else you owe money or particular vendors, those vendors will then get an extra 10% off of Amazon goods while using the same check. Next thing you know, it's a coin. I mean, they are literally trying to run the world. It's unbelievable what they do. They're trying to own everything and just divert everything to Amazon. And I'm saying that with a smile on my face at this point.
So that was all the Amazon note. Although what's Bezos worth now? It's like absurd. That was all over this week. I don't even recall what it was, but Cadillac's electric and self-driving cars, CNBC, Cadillac's self-driving system is better than Tesla's or Volvo's. Cadillac's Super Cruise was better than Tesla's autopilot in their tests. The foundation of the Super Cruise system is an extensive array of LiDAR maps that cover most of the major highways in the United States, teamed with the car's radar and cameras. The maps allow, we've talked about the CT6, the Cadillac CT6, the situational awareness that beats any other commercially available system.
Wow.
Super Cruise, unlike competitors, allows you to take your hands off the wheel once you engage the system. A light bar on the wheel turns green to tell you it's safe to remove your hands. In fact, you're best keeping them off the wheel if you don't want to disengage the system by nudging the wheel. You're supposed to keep your hands on the wheel when using autopilot and pilot assist. Those are the Tesla and
Those are
Volt
Teslas,
products.
right?
Yes. Of course, there's still, rudimentary semi-autonomous system, and therefore the driver remains entirely responsible for the car's actions. That's why a small camera mounted on the steering column monitors your eyes to make sure you're paying attention and not watching a DVD or reading a book.
Wow. So what does it do then? Does it yell at you?
No, it says, I'm shutting off. You got to get your hands on the wheel. I'm shutting off, and if you don't put your hands on the wheel, it literally stops the car.
Wow.
It's probably using LiDAR on your face.
I love LiDAR since you guys explained it to me.
But
My
that's
favorite thing.
Another fascinating, because everybody touts Tesla and their autopilot, but Tesla's actually now ranked last in their self-driving capability, which is quite fascinating. Who left Tesla yesterday? That was big news. It was like one of their chief accounting officer or something. Yeah, Tesla's chief accounting officer leaves the automaker. The guy who knows where all the bodies are buried. With all because their numbers are really interesting sometimes. They do some very creative accounting. We'll have to see what shakes out of this, but and the press release was, he's leaving for personal reasons, nothing to see here. That's essentially what they said.
Personal reasons is your company sucks.
And he was always the first in all the filings. He's like, whenever he got shares of stock, he's like, sold them instantly.
Really?
Yes. Because you have to file when you're a C title and you get lots of shares, you have to file your forms. Like that what transactions you're doing, because you're essentially one of the chief people in the company. And he was known for, I got vested some more shares, let's sell them. We'll have to see how that shakes out. So we had some Fed things this week.
Yeah, apparently Bostic said the stock market's gone through the roof. This is very informative.
Yeah. Let me look at a chart there. Cash and carry is nervous about cost of the economy due to the tariffs, because we had a lot of tariff talk this week.
We had tariffs done this week.
Yes, we did. So we didn't just have talk. We had, although Canada and Mexico are exempted for the time being.
They're going to call that NAFTA, by the way.
The exemption?
No, yes, the North American Free Trade Agreement is going to be a waiver for Mexico and Canada steel.
Yeah, it's funny because so the tariffs hit the market fairly hard. I mean, Draghi commented on it. Draghi had a pretty snarky remark where he said, if you're going to hit your enemies, if you're going to hit your friends, then who are your enemies? But this to me is like, tariffs just in general are bad. But the issue has been the sort of, ambivalence of tariffs applied to U.S. goods, which has been going on for 20 years. The ambivalence of all past administrations to respond immediately when that happens. So now there become these sort of accepted practices where companies know, okay, if I'm going to go into China, I know I'm going to make this much less, but there's so many people there for my product that it's fine with me. And that's become this kind of accepted thing. So I think it's unfairly hitting the president right now in terms of like tariffs are bad. Yeah, they're bad. And they've been placed on American goods forever. I'm not in favor of these tariffs because it could cause an economic slowdown in the face of there's a 20% chance that we're going to get inflation now. I think it's less, it's not 20%, but it's less than 50%. If we start to get inflation and we have a trade war, that's bad because that's going to be stagflation, and that is the worst possible of economic conditions to fix. So it's also one of the most painful because you have low economic growth with prices rising. If you have strong economic growth with prices rising, people are making more money, so they chase those prices and they're still able to afford to live. But if you got bad economic growth and prices rising. It's poorer people trying to buy more expensive stuff. It's bad. So it's poor timing. I think this particular president, his favorite report card is the stock market and the stock and jobs, and those numbers are still well pointed upwards. So he doesn't have a lot of fear of this, and they may not be material, especially if all these other countries are able to argue why they should get exemptions. My guess is our key trading partners will get exemptions, and this is a very clever way to place targeted tariffs if that's what you wanted to do.
So is this going to? This won't change how many hikes the Fed does.
Yeah.
And what are the odds for the March hike? I mean, is it 100% yet? Because
no, it's not. Hold on, let me just look it up. It was still in the 80s last time I looked, which was early this week. After today's price action, it will probably be lower than where it was at the start of today, simply because of how there was no wage pressure in today's number. But the March rate hike's happening. Let's see where it is. Live on the Money Path podcast, where is the Fed Watch tool? Putting the March rate hike, survey says 88.8%. So it's higher than the last time I checked, which was 84% last time I checked.
Yeah, well, you also talked about Bostic. And the stock market has gone through the roof, the comment. He also said some of the developments in the trade policy introduced some uncertainty in how the economy is going to perform, so I'm really taking a wait-and-see attitude. As for the year was decided to do 2 or 3 increases or 3 or 4, he said everything is on the table. Well, I think 2 is pretty much a done deal unless something major happens. 3 is probable, 4, and 5 is a no-no.
Yeah, again, there were people that were out there saying 5, and it's like, you crazy. No, they need to be quiet.
All right, and finally, you already talked about Draghi, but he had a big presser this week. Mm-hmm. What any highlights from that?
The main highlight from that, they took the quantitative easing bias away, meaning they took away the language in their statement that said we reserve the right to buy more assets rather than fewer assets if situations in the economy change. They removed that language, and now people are assuming that that's the first step toward reducing QE. I think the big turn in Europe comes when they raise interest rates. Eliminating QE has not seemed to do much. I mean, certainly didn't do anything in the U.S. I think more important than Draghi this week was Japan. But just to finish off the Draghi stuff, he made a lot of comments on the dollar and on the potential trade tariffs, and they were very negative. The weak dollar, meaning he wants a strong one, and they were very negative the trade tariffs. Draghi was very negative the trade tariffs. But he's only got a year left there, so who cares?
Well, all right, so you talked about Japan. What was your big takeaway from Japan this week?
So Hirohiko Kuroda, I think that's right, Hirohiko Kuroda, who's the governor of the Bank of Japan, the head governor of the Bank of Japan, said that he expects Japan's inflation target to be reached in 2019, and then he very coyly hinted at the potential removal of accommodation, which has not happened in Japan. Okay, it's never happened in Japan. They've only increased accommodation. They invented quantitative easing 20 some odd years ago, and it's never been reduced. So that to me was a very big deal, and they had their GDP upwardly revised yesterday. Now, Kuroda walked that back a little bit, saying, no, I'm just saying that it's possible we reach our inflation target. He walked it back a little bit, but he thinks it. He just walked it back because of the market's reaction. The dollar had been very weak against the yen, in a very discernible downtrend against the yen. The yen had been strengthening. And then when we got the trade tariff talks, that went even further because the yen is a safe haven where people flock to when there's political or economic turmoil in developed markets. So the yen had been pretty strong, but those Kuroda comments were a very big deal.
Then I have to ask you one more thing.
Please
What's
do.
your why? What's your why this week?
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann and ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
My why, I really kind of talked about it, but I'm going to just expand on it a little bit. The jobs number today was spectacular for the U.S. economy. Stocks, last time I looked, and again, we're recording this about 11:30 Eastern time on Friday. So the last time I looked at the general price change in equities, we had the Dow up 272. That's the
What
cash.
percentage is that?
272?
Yeah, I only operate off percentages.
Okay, 1.1% on the Dow, 1.05 on the S&P, and the NASDAQ composite, well, the NASDAQ 100, because that was the first one I found, is up 1.25%. I can't find the NASDAQ composite. The Russell's up 1.07%. NDX, why is NDX not on here? Hold on. I just might as well get the composite in there as well. I don't know. It's up too. So it was a very good report, and I want to focus on that labor force participation rate. One of the negatives to all the good jobs reports numbers that we've had has been that labor force participation rate was stuck, very stuck. Now, there's not a wide range in labor force participation. If you get a long-term chart of labor force participation rate, you're really only looking at about 65 to about 61. It doesn't have like a huge range, because mainly we've generally, if you look at the Dow, it generally goes straight up, right? So our economy generally continues at a very stable upward rate, but the labor force participation rate had not been going up with jobs. It just had been stagnant. The exact range of the labor force participation rate since 1950 has been a range of about 66.5 to a low in the 50s of about 59. So it's not a wide range, but the stagnant nature of it at 62.7 argued that while the economy was growing, the job losses from technology were eating a lot of it up, because there were people that were just out of the labor force. So an 800,000, 806 to be exact, increase in labor force participation rate is a massive positive. And again, I have to state that this is prior to any fiscal stimulus hitting the economy. The only fiscal stimulus that's hit the economy is $1,000 bonuses and some minimum wage increases, which really took effect at like the beginning of February, and this is February's jobs number. So the very, very smallest of percentages of fiscal stimulus has hit the economy. So I think that we are in for a pretty large spike in economic growth in the U.S. and in globally. So that essentially is my why. These numbers, to be as strong as they were without the fiscal stimulus, that's a big deal. And there's just no way to not give, whatever you feel about President Trump, there's no way to not give him credit for this. There just isn't. The president has very little to do with the economy, but one would argue that he has been so focused on just that even if you believe he's messing everything else up, and this is what I don't like about coverage of him, and this is not a political statement, certain media outlets never give him credit for the things he's doing right, and they justly beat him up for the things he's doing wrong. But you have to do both. We're going to do both if it's appropriate to markets and economics here on the Money Path podcast. And he needs to get credit for what I think is about to happen. If it doesn't happen, there's no blame. There's only credit, because if it doesn't happen, then we continue to grow You could look for things that he did, but I don't see anything that he did to slow the economy or hurt the economy, except for the tariffs. But again, let the tariffs play out, because my guess is that there's a lot of loopholes in the way this was put together, and there will be a lot of allies and big trading partners that will get exemptions from these tariffs, and they will be very, very targeted, which is what they should have been in the first place. This is very typical of this president to speak loudly and carry, a small blackjack, not a huge stick. I think this has been a good week for the president. It's definitely been a good week for the equity markets. Crude oil a little different, but I'm going to leave crude oil aside. I'm just going to say that crude oil being above 60 is a mystery to most people, but it's not to me. So we'll talk about that next week. That's my why.
Michael, you
fantastic.
You rolling a what?
No, I just I couldn't mute my phone properly, and somebody was on the answering machine. So,
all right, here's Mike's what. I'm going to do your what. You ready?
You're not going to do my what?
I got a what for you if you want.
Okay. What is it?
Dollar index double. Take a look at the DXY and take a look at that chart and how we went down to the 150 after triggering, right? Giving time for the 50-day moving average to come down and join the peak, right? So
I don't know what this double top that you're talking about is.
Double bottom, DXY.
I know. I don't.
Oh, you don't know what the pattern is. So anyway, we went down to the 50% retracement of the peak to the right-hand low after the pattern triggered, but the pattern triggered against the 50-day moving average, which oftentimes would keep Mike and I out of the trade. But now the peak and the 50-day moving average are symbiotic, and the dollar index is climbing back up. So if it were to break the 50 and the peak, you're getting to that 175 extension target, which I believe is just below 92. No, it's 92.30. And again, that lines up with the flat level to the left.
Yeah, well, even if you took it, because I have this on my chart, even if you took the entry, it didn't ever stop you out.
Didn't stop you out, no.
You'd still be in the trade.
Right.
Also, wanted to talk about another double we talked about, and we also put on the YouTube channel, was the double in the S&P E-mini futures, which did not stop us out. We had that sell-off last week that actually didn't even come close to a stop. We needed a close below 2603, or really 2600, or a trade below 2578. The low last week came to 2647, and it didn't come close to that 2600 area, and now we're back up above the entry level again, trading 2773. So everything's still intact with the double on the S&P E-mini futures.
Yeah.
So for the people who were contacting me saying, "See, you said there was a double bottom, they went down." Well, markets don't always go to the target right away. But it didn't stop it out. That's why you follow the pattern rules. And if it does stop you out, then it was one that did. It was one of the few that don't work. And if it goes to target, then you get to have another successful double. But you can't judge it either way based off any day-to-day price action. And if it hits the stop, you're stopped out. If it hits the target, you take your profits. And if it hits the stop reduction zone, you move your stop. That's all there is to do it. And it's the same thing you do in the cryptos too.
Yeah, this is a very good lesson on the way to trade and the risk of trading and how not to panic out of a position, etc. That's why I oftentimes hope these patterns hit their target, not because I'm necessarily in it or any of that, but just because there's good teaching lessons in these types of setups.
So those are my what's. A follow-up. We had two follow-ups, the DXY and the S&P.
Mm-hmm. That's it.
And that's
all right, guys. Thank you very much for joining me today. This is Bob Icino.
And I'm Mike Arnold. And we will talk to you soon.
Next week. Cheers, guys.
Bye for now.